Nice topic. We want to talk about how to get past the pitch, because so often a lot of companies are told, let's pitch, practice your pitch, that's how you get investment, those sorts of things. And the pitch is just the beginning of the story. Really, you have to go about building a company, not just pitching a story. Understanding the market is, of course, important, but when you're talking about building a company is not just selling once, it's a repeatable, scalable model that can, meaning you can sell at scale and implement at scale.
I think that knowing your investor and not all money is good money is something to have in mind. So we may have the best of intentions, we may be very interested in your company, but it may not be a good fit for you. And so having that discerning approach to how you're seeking your investors and what those attributes are that you're looking, can they help advance you towards your milestones? We're more than just capital, we want to be your partners.
The most important thing I would say is market adoption. So having a clear pain point with a solution that resonates with customers and maybe having some early traction that you can show and a roadmap, a clear and defined roadmap.
And that roadmap is not just about your product, it's about your team, it's about your IP, it's about your funding needs, right? So figure out what the endpoint needs to be. Some investors say, don't talk about your exit, but oftentimes you want to plan from your exit backwards because there are multiple ways you can exit, but knowing where your first exit points are, your first inflection points are, and then working towards that and figuring out how much funding you need, how many people do you need, what other resources do you need.
It's about the investor, their thesis, and what goals they're trying to accomplish with the money they've been entrusted to manage and invest. So really it's, understanding that whole ecosystem of how money comes in and out and what the strategic objectives they're trying to align with an investment. That's a quick path to a no if you can't defend your assumptions.
I think there's this concept that you have to have a really big market size, yes, but you also have to have everything rooted in reality and your projections. These are things where investors that we will pick at. And if you're assuming that you're gonna capture 10, 20% of the market share, it just immediately will be yellow flag that you are not rooted in reality and you don't understand how difficult it is to capture 1% of a market. And so just be mindful of those projections.
It's not about being cheap, it's about knowing it's gonna take more than anybody thinks, just because that's just how the market works. And if you magically get lucky, that's awesome, but luck is not a business plan.